We see a lot of players, coming in India, the wealth managers and developers now merging together. There are AIFs, there are funds, real estate funds. I think in some way the financial planners or the advisor community is already participating into real estate through these kind of funds, right? So do you think that this is a better way to get an HNI or an ultra HNI pool in their money and come in at a larger project, or do you think rather massy product like a REITs or a direct investment would be a better option? Sanjay, if you can throw some light on that.
I personally believe going through REIT for new investor starters is a better route. Because eventually, real estate is also very messy. There is a title due diligence, there is a technical due diligence, there's environment issues, there are, ownership encumbrances on the properties and assets, there are property taxes related issues. And I don't know whether you know, but the income tax department, for example, if there is arrears not paid for 11 years, if there is any claim, they can attach the property. So, you don't want to be in that business if you have a large exposure as an ultra HNI. So I would say go with a REIT. But if you are a very seasoned investor and where your portfolio is upwards of 2,000 crores, and because there are some ultra HNIs that I know who started 10 years ago and 20 years ago, they're already 2,300 crores plus investments, and I did a lot of advisory for them. They are very mature and they have set up organizations to manage the risk and mitigating the risk. So I think it's pretty solid. Just to support why this market is going to grow, we will reach 1.3 billion square feet of office in next 3 to 4 years. So we will add over 600 million square feet. And if you add warehousing, logistics, etc., on an average, every year we do 140 to 50 million square feet of leasing and construction of these assets. Right. It's there. So, and the moment the asset comes, the institutional investors and the REITs lap it up. So it's become fairly competitive. The yield has compressed from 10.5% that I sold asset at one point of time, and Kamlesh would vouch, is down to sub 8 cap already. And sometimes some of the assets can even come down to 7 cap. And you have a negative spread between cost of borrowing and actual yield, which is very unique in India, by the way. And globally, it's a positive spread. Right. So you can imagine how quality asset with least risk and institutional is just so attractive to investors because there is no development risk at all. And it's a steady flow of income.
Just to add to Sanjay ji, I want to also add, the best example of Bombay real estate is, Hiranandani projects. All of us are aware in Powai. But the people don't forget that it took them 20 years to build that entire township of 300 acres. Sanjay ji is building upward of 50 million square foot in next 3 years. So that's the kind of capacity built up which has happened in this decade. The scaling up of the operations. We see China में 6 महीने में building बन जाती है, 1 साल में बन जाती है, यहाँ 5-5 साल लगता है. Reasons are on the policy side, on the planning authority side. There is also the access to the capital. So these are both ways meeting. The two domains are intersecting, where the developers are upping their game by speeding up their construction, and the ease of availability of capital also helps them grow fast. And this is the objectivity of our government of becoming a Viksit Bharat, which they have been saying, $5 trillion economy and 8 trillion, all these numbers that we hear. Unless until we speed up, you don't have 30 years to make up all these things anymore. Look at some of the cities like Hyderabad. आप चले जाओ downtown में Gachibowli areas and all, the way they have transformed in 1 decade, it is phenomenal. And the kind of catchment they are getting, definitely there is a growth happening, and I think we have a huge positive possibility, infinite.